Good morning, everybody. I would like to say a warm welcome to everybody. It's more than 80 people in the room now, and I know many of you are looking at the webcast presentation as well. There are some new faces here today, and I am Sverre Bjerkeli, the Chief Executive of the company, and I joined the company together with the chairman, who also is present today, as normally I would say. We started Jostein some 15 years ago, actually, running from January 1st, 2014. From the very early beginning, we defined what we would call the DNA of the company, which is on this slide, and it's always a slide which I normally start with. And why wouldn't I today as well? There are 12 statements on the slide. We do have a requirement that all employees in Protector should remember, gradually understand, and then live. And obviously, when we do deliver poor results, it is even more important to reflect whether these words are words or realities. So I would like to be open with you today. I will discuss credibility today, and I would like to start with the word challenger. We are the challenger, and obviously today we are challenged. So the first part of the presentation is about a challenge that has arrived recently. And that challenge is a small bug, less than 2 centimeters big, basically harmless. It doesn't harm people, nor does it harm animals or buildings, unlike other pests you can find in Norway. So on this page here, you can see more dangerous small, and dangerous in brackets, dangerous small animals living in Norway. This little chap here, he could actually eat a house, while the bug we have met recently, the gray silverfish in English, the guy here, does not eat buildings, does not harm people. Harm, how do you define harm? At least is not dangerous to. In any way. So why is it so that the district courts in Norway have concluded that this little animal eating paper is a basis for a payment to a buyer of a house if this animal, who today is a very normal animal in Norway, arrived to your house? What are the consequences if that kind of practice will continue? That's the question which we will address towards the legal system in Norway in the following months and years. However, we can't risk losing that fight. So obviously, we have taken a decision to exit that risk, obviously, because we can't wait for Supreme Court to arrive and to give a wrong conclusion at the later stage. We can't, so we will, and we have excluded this little bug from the change of ownership product from November the 1st. I explain that further a bit later in the presentation. The question is, should we have seen it before? Should we have understood the problem earlier? Should we have communicated it earlier? Should we have taken losses earlier? Should we have taken other actions than what we have done recently? That is a reasonable question, obviously, which we discussed a lot together with the board yesterday, where we had a dialogue with the board. Should we exit this market, or do we think it is profitable to continue in this market? And the conclusion yesterday evening is that we will continue in the change of ownership area. We will not walk away from the market. However, we might end up with zero market share in that market, depending on the feedback from the market on the kind of activities we implement now. But let's go back a little bit. This little bug arrived, we think it arrived to Norway in 2013, this innocent little bug. We saw the first claim arrive in 2015. We think that this bug basically arrived from Africa many years ago, but today it exists all over the world. It's in Sweden, it's in Denmark, in Germany, in UK, in Europe, in Asia, in Australia, in Africa, in the States, it's everywhere. So it's not like a Norwegian kind of small bug. It's a little species which creates no harm and do not have an attention in any other country than in Norway for some strange reason. We got 3 claims reported from Q3 2015. We do get around 4,500 claims a year within this sector. 20 claims 2016 and then 38 in 2017. Pretty harmless, wouldn't you say? But then suddenly something changes. And that happens gradually through Q3 2018. So what we see is a gradually escalating situation where there are more claims reported to Protector. However, there are no legal kind of conclusion at the moment. We can't really see why this should turn out to be a big issue. But we can see 208 claims accumulated in 2008, gradually growing through the year, with September as the worst month by far. So we are getting more claims reported in September 2018 than the 2 first years here. So 2 first years, 1 month. It escalates, and it's moving faster and faster and faster. This sounds dangerous, doesn't it? But it's a harmless little bug. But we have to be correct. There is a fact now which we fully understood in late July and through August, with 3 district court decisions in a row from small district courts, I think, different places in Norway. For you that are not familiar with our legal system in Norway, I think we have 470 or 76 district courts in Norway. It's the first instance. Then you go to appeal, and then you go to Supreme Court, like in most countries in Europe. So there are absolutely no appeal decisions taken so far. This is a first court level. And in late July through August, we saw that we might have a serious problem. Not might, we have a serious problem. And then September escalated with more claims. The actuary had to do what he should do, go into it, and try to find out what the potential reserve losses could be for the years previous to 2018, but also for Q1 and Q2 2018, where we didn't see the problem in those 2 quarters. So what's stated here is that gradually we understand, it goes to alert status and then red alert status, and then the actuary waits a week or 2 until figures are ready to be analyzed and a week later, and now we are in the beginning of October, it is what you could call a crisis. Okay? It's a crisis. This crisis arises from an innocent bug where Norway is the only country in the world which compensates buyers of properties for a property value decrease. It came as a surprise. Obviously, I apologize towards you investors that we had to present the kind of figures based on normal actuarial analysis. And obviously, it has been taken seriously internally in Protector to, one, try to understand, two, go back, what could we learn, and three, and the most important thing, obviously, we can't do anything with history, take any actions necessary and move forward in that area. Obviously, we will not kind of compensate new claims in that area now. We are of the opinion that the bug is normal. It do exist in Norway. It doesn't really harm. Harm is, again, a word which is difficult to define, but at least it doesn't destroy or hurt people, animals, or buildings in that area. It eat paper, books, wallpaper, and things like that. So immediately after the actuary had done his analysis, a project called Grey Silverfish, the English word for the bug, was established. And 10, 12 people plus more have worked, obviously, 10, 12, 14 hours a day the last 14 days in order to meet you today, but also to conclude yesterday evening in a board meeting whether we should walk away from this segment or whether we should stay in this segment. So one project is about the silverfish himself. The other one is towards the real estate broker market and many other external parties which we are working closely together in order to discuss with, influence on, and if possible, agree on necessary action. So we have made hundreds of phone calls, had tens or 20 or 30 or 40 or 50 meetings with top management during these 14 days, and been out there in the market in order to prepare for a potential situation where we would continue. But we will not continue if this bug could harm us in future. And I explain reserve setting and figures a bit more pretty soon. We have obviously had a lot of internal activities. We have considered to shut down this business unit, which next year will consist of 8% of the total business. So we have 92% to go. We could exit 8, obviously. We could do that. So we are not in a kind of difficult company position, not at all. The question is whether we think we can earn money in this segment going forward or not. And obviously, today, we think we can, and we will. That's our position today. Obviously, when you are in such a crisis situation in a segment, okay, a segment, 8% segment of our business, we have to consider to exit, but we should also consider to go to the other side. There is an other side product here, which do exist in the market, which is a mature product, which have some kind of profitability in today's market. I will not conclude on this one. I shouldn't really tell the competitors that we will never ever go there, but okay. I think that the situation is obviously like if we exit the change of ownership segment, we will actually not go on the other side. Okay? So to the biggest player in that market, help, now you know, that's okay. So we won't go to the other side. To real estate brokers, then you know, we will not go to the other side. So we either stay with you here or we walk away. And then you have a monopoly situation on your side, which is the fact of the situation here now. So if we leave the market, there will be a monopoly situation in this market, which could be a challenge for these people here. So, okay, the kind of gray silverfish project, one, who is the bug? What kind of view do we have on the bug today and in future? External activities, a lot of internal activities, and then consider to go to the other side, and the conclusion on that one is not at all. Okay, so the kind of decision which we have taken, and the first one is communicated to the market already, is that we will exit this product from the terms and conditions in the product from November the 1st. The financial consequences of that, I'll be back in a second. We have changed claims handling practices, and we have both before and after October 11th, a large set of activities which we have implemented. And we saw the bug. We had them in the courtroom. We have discussed internally, but we didn't have figures or an understanding before late in quarter 3. Some of you might ask the question, why did you do buyback in July if you knew? And the honest answer is that we didn't know, not at all. And these things could actually happen in an insurance market. Very seldom that you see such a rapid development on a claim situation. Extremely seldom. This is not at all close to a pandemic, but seen from a figure point of view, you could argue it acts like, because it's escalating, and it's escalating very quickly in that area. So your question now is whether the reserve losses which we have taken in quarter 3, whether these reserve losses are prudent, and if they are good enough. Are they conservative, or on the other side? That's your question. And obviously, we understand that question very well. Our feedback to you is that we cannot give any guarantees. How can we? That's not possible. Again, open is a value in Protector. So we can't give guarantees when it's not possible to give them. So you have to consider the risk that it could go worse or it could go better. And you must remember that with an exclusion November the 1st, there is still a period of time, around 3 months, where more risks arrive into our books. And that's the behavior of the product. Okay? So I won't explain that in a detail. You can ask questions about it after presentation of Capital Market Day, but it's the nature of the product. We exit November the 1st, basically it takes 3 months, which means that you should expect a pretty poor quarter 4, not because the reserves will change, but because there will arrive new risks during quarter 4 related to the bug. So expectation quarter 4, you must be aware of that fact. However, when you enter the new year, new risks will very quickly disappear, basically beginning of February in that area. And then it's back to the reserve setting in that area. The drivers for claims ratio development, and obviously also the underlying drivers for understanding whether reserves are good enough or not, is that can we do something with a basic problem? The bug is a harmless inhabitant in Norway. If we win through with that kind of opinion, which I think common sense says it must be right. Then we will have a reserve gain in future. Could we kill the little bug? There are a lot of resources also from Protector used now in order to kill the little bug. There has been some successes, and it has been some failures. During the last 18 months, we have been involved in some tests in the market. We have. And we have got the feedback from professionals doing these kind of things that now we got hit, now we killed it. Oops, 6 months, he's back again. But there will be methods to take them out, but it doesn't really matter in our opinion because it's a normal little harmless bug belonging to us here. Get used to it in that area. It could be changes in courts of appeal, in claims practice, and in average claim size. So these are the kind of elements which we are looking now. We think that if reserves are not correct, you could see a good scenario where we are getting around 52 million of Norwegian kroner reserves back again. That's a good scenario. You could see a bad scenario where we lose around 38 million Norwegian kroner. That's a bad scenario. And obviously the question is, well, how do we define good and bad? And I think that's kind of a realistically interval. However, it could go worse and it could go better. And neither of us can really know at the moment. This is the nature of insurance business and reserve setting. I will comment more on reserve setting seen from a company point of view in the Capital Market Day. So then you can be more competent to evaluate the kind of reserve discussion we have here in a bigger totality. And I think that what you will see is that you shouldn't really worry. That's my statement. You shouldn't really worry. But that's an agenda because that takes a bit of time to explain for the Capital Market Day, where we have announced that we will go through the historical to-date reserves in the company, including grey silverfish, change of ownership, workman's comp, property, motor, and many other products. So take a bigger picture, have a look, discuss with ourselves what's your opinion in that area. So we have taken a loss. It could go better. It could go worse. Here is a kind of realistic area where we are looking into, but think it through. It's kind of your decision to take. I'm absolutely sure that these kind of people who this morning are very happy because they all were afraid that they lost their job today. They are extremely motivated to do as good as they can. And the KPIs in that business unit is on a historical good level. And we have strong signals from the market that they will accept exclusion of the bug. However, we can't be sure. If they do not accept, we walk away. Okay? Promise given. They don't accept, we walk away. There are strong signals that they will continue with us. Remember that we earlier have said that this segment have other profitability challenges as well. And we have left 25% of that volume going forward. So that's also an element of the totality. However, I am of the opinion, the board is of the opinion, that we will earn money in this segment going forward. Historical to date, combined ratio is still on the profitable side, even after grey silverfish. So it has been profitable, and it's our opinion that it will be profitable going forward. So I prepared some 20 minutes on the little bug, and I spent 26, I guess. So should we move on? Any question to the bug? Yep.
Just what are the implications for the seller and the buyer of a house when you have excluded this from the product? Does it mean that there's a claim of, say, 1 million kroner can the seller or can the buyer not make this claim, or does it mean that?
So the question is, what's the potential consequences for seller and buyer of a property in that area? The consequences is that the buyer could put a claim on the seller, and the seller is running a risk in future. So that's the consequence in that area. We don't see that risk as very big, but they should be aware of it. And the following consequences of that kind of thinking: if you are living in a building block with 100 apartments, and if there is a bug in the cellar in that building, there is 100 apartments there, what happens yesterday, the day after you find that bug, is that the value of those 100 flats might go down with 10%. Do you think it's reasonable? I don't think so. It's a bug existing in that area. Don't be too scared about that story. I've given you figures seen from our point of view, but it is a rather stupid and silly situation we are discussing at the moment in that area. If the other side would have been something else than an insurance company, I'm pretty sure that even district courts would have said something else. But insurance company, deep pockets, let's go and make the buyer happy. Even if this is the only country in the world where you compensate for that. Okay, so we move forward and continue. No more questions about the bug. We have spent almost half an hour about that. I'm here in the meeting through the day, so we will skip the bug now. The question is, do you still think we are credible as a company after delivering kind of results towards the market? Let's discuss. Be open in that area. I understand that we have disappointed you the last couple of years with some kind of bad news. That's obvious. Have a look, think through, and feel free to give feedback whether there are something here missing on the list. However, you might say that we have something on the positive side as well, couldn't we? We have a pretty good story in some areas, which might kind of make you think that we have some kind of credibility left, even if we have disappointed you in 2018, and also on some occasions earlier on. And this thing is also something to have a look at when discussing credibility. For 10 years now, we have been pretty clear on our guiding on the volume side, and here is the jury. There are very few companies, at least as I am aware of, that are so very clear on guiding and that go back and backtrack what's happening here. So we have guided on volume. Basically, we have delivered according to guiding or better. We have guided on combined ratio. And have a look at this slide later on and conclude for yourself. Basically, what you will see is that we do not miss guiding very often. You could argue it's pretty credible to give guiding and to deliver according to. Yes, there are some disappointments here, 2 out of the 3 last years, but have a look. It's insurance, it's through a cycle, it's 10 years, so it's obviously up for you to decide on that area. At the same time, I think it's okay to summarize in figures what has happened in the last 10 years. We have had an average growth rate of 21, a combined ratio of 93, return on equity 21. We are cost leader in the world and quality leader in the market. So I would say it's pretty good. I do understand that going forward is what we all are waiting for. History doesn't really help, does it? But when discussing whether you have faith in the company or not, have a look at the history, listen to the story, and take your own decision whether you think this is credible or not. Then we are into the results for quarter 3, which you have seen previously in statements given from the company already. The only thing to pinpoint here is that exclusive of change of ownership, the bug-related area at the moment, we have a combined ratio size 96. It's not very good, but it's not very bad either. The question is whether that 92% of the business will improve from 96 going forward, or at least not get worse. Because if you're growing 20% a year, we will not next year, by the way, but we have. Okay, if you're growing and delivering a combined ratio size 92, it will create a lot of value. 94, it will create a lot of value. 96, okay, then we start to discuss. So 96 in long term is not a strong combined ratio, not at all, in that area. But okay, it's 96, it's not 104 or 117 or something like that. So that's the company level, but 98% of the business here, both year to date and in this quarter, is not too bad, I would say. If you see on the volume side, we are growing, and UK is the driver for growth. And here is kind of a bit of an update, which is a bit more detailed than what you normally see. So you can have a look here at, for instance, the big business area, Norway commercial. And you can see the year-to-date claims ratio, which is not good. And we have been discussing with you so far what kind of actions to take in order to improve profitability in such a big area. So you will have a better update on different business segments in Protector in order to consider whether the big area, the 92% area, commercial Norway, Sweden, Denmark, and then commercial UK. We only have commercial, that includes the public sector, and Finland, whether that will be healthy going forward or not. Remember that UK is pretty early, so you shouldn't worry too much of that figure. The net claims ratio is 115. But what I say here, don't worry, there are small figures. Here is another figure. This is the gross claims ratio. It's 66.9. It's pretty good. It's better than pretty good. It's very good. But don't be too happy. It's small figures. So the gross figures are good, the net are bad, and neither have any value to look into. That will be slightly more explained in Capital Market Day later. However, it's too early to say. Obviously, we have a plan to earn money in UK, and Henrik will comment on that plan. But we are too small figures, too early in order to say anything with a strong voice about the figures in UK today. That's not possible in that area. What we will do and have done and are receiving feedback from the market today is that since the other areas, the 92% of the business of Protector is not doing as good as it should be. Year-to-date combined ratio, 96. That's not good enough. And we have to prepare for a quarter four, which normally and technically is somewhat worse. So it will be slightly higher than 96 at the end of the year. So let's say we fly from 98. Just to give a figure, it's not a guiding. Let's say we start flying into next year. We start on 98 on these 92% of the business area. Be aware of the fact that we are increasing prices with more than 8 in Norway, 4 in Sweden, 12 in Denmark, which will lead to clients will leave in Denmark, some in Norway, few in Sweden, in that area. That's a pretty important statement. And the good thing is that the market communication in these areas are equal. So big competitors in the Nordic market, in our segment, say the same thing. Prices must up in Norway. And prices must up in Denmark, in our segment, workmen's comp, like an example, in that area. So price increases is implemented as we speak. We don't know the result of that, but we either will get them through or lose some clients, and what we are fighting for is to keep as many as possible, obviously. To get rid of clients is easy. It's difficult to convince them that they should accept a higher price. But we won't back out of the kind of activities we have here. So my question to you, is there any questions to the profit and loss statement as such for commercial sector? Or change of ownership, yes?
Maybe a question on the outlook, because you say 2019 in the press release, it has acceptable combined ratio to 92%.
I'll come back to the outlook at a later slide. So question about outlook, I'll take it when we are there. Yes, a question?
The price increases in Norway, as you say, many of your competitors are doing it as well. When do you think these are coming through your accounts? Is it through 19 or is it just first in 20?
Okay, when will price increases get through? Most of it will get through January the 1st, 2019. And some of these kind of price increases started July the 1st this year. So I would typically say that at least 75% what we are talking about here, higher in Denmark, because the renewal date January 1st Denmark is even bigger than in Norway. So a significant penetration from 2019, give or take 75% penetration for the full year. Thanks for the question. It's a good one. Yes?
Can you comment on the profitability without the runoffs this quarter? So if you exclude all the runoffs this quarter, it's still a combined ratio of 100%.
That's correct.
Can you comment on the profitability there?
Yeah, so what we have is reserve losses on the change of ownership area, and we have some kind of reserve losses. No, I'm sorry, gains on the commercial sector. And as you said, the accumulated combined ratio is around 100, slightly above, if you exclude all runoff losses. It's a poor quarter. So if you exclude runoff losses, the Q3 in change of ownership is very poor, like one example. And in some areas as well, as communicated earlier, we will not have a healthy combined ratio in Q3 and 4. We said before the grey silverfish arrived that you would see gradually worsen situation for technical reasons during Q3 and 4 is exactly what we see today in that area. So yes, you are right that still the Q3 results exclusive of runoff totally is not at all good, you could say. However, you should spend some time on the reserve setting in the capital market kind of walkthrough, because what you will see is that in the commercial sector, it has been consistently runoff gains the last 6 years in that area. And let's say that the runoff gains, give or take, has been around 600 million Norwegian kroner in commercial sector in total the last 6 years, which is not far from a correct figure. It could be, I'm not exactly updated, but give or take 600. If you divide that with 6, take a bigger picture, you will get 100 every year. And what you will see is that there are some runoff losses which has arrived on average every year the last 6 years in these kind of sectors, exclusive of change of ownership. And if you met me 6 years ago and we discussed reserves commercial sector going forward, you would have remembered that I said something. I said that you might expect a runoff gain in commercial sector going forward between 2 to 4. That kind of statement has been given in writing to you around 6 years ago. Look back and you have a look. That's what's happening and has happened the last 6 years. So I wouldn't worry too much about resources. You are too much focused on short-term reserve changes. Okay? So you are too narrow in your view in that area. And as an analyst, you should take a bigger picture in that area. And we talk more about that in the Capital Market Day. Okay? I have to move on, I think. One more question. Okay, thank you. Then I move forward. Anders, you have potentially some questions coming up at the end of the presentation. Vibeke, you've got them, because there are some questions coming in from the webcast area. Grenfell Tower property claim is settled. Reinsurance arbitration is postponed until May. practical reasons, some illness on the other side, couldn't do anything about it. So that will be May. The worst case scenario has been reduced from 100 million to 85, and we don't like it. We would be careful with placing a lot of reinsurance with Munich Re going forward, because we shouldn't have been in that kind of situation. But okay, you have to meet in May, so let's wait and see. We can't do anything now, for now. Investment performance is 0.5% return this quarter. I've talked about the results. The balance sheet is very strong. Our solvency capital ratio is 183. Another company in Norway gave a statement to the market yesterday. They had a solvency capital ratio based on the same methodologies, I think I remember right now, 181. What company? Come on, you were there. What company? Gjensidige. So Gjensidige 181, Protector 183, based on the same model. I understand. Gjensidige, based on a partial internal model, is a lot higher. I know Gjensidige is selling a bank. I know they will pass 250. I know they are extremely solid. However, yesterday we had an equal solvency capital ratio. So we have a strong balance sheet, despite the fact that we have delivered a poor quarter three, and despite the fact that we did buyback in July. And the stress test, we can stand up to anything that you might think of and slightly more. There is some kind of simulation on the stress test. There are some insiders buying more shares during summer. Not perfect timing. Okay. So they bought in July and August. So then you know for a fact that we at least couldn't see the gray silverfish. And here is my summary. We have a poor quarter and a poor year to date. We have excluded the gray silverfish from terms and conditions. We are growing, and profitability actions, price increases and other initiatives in Norway, Denmark, Sweden is gradually kicking in because it started not today. It started half a year ago, and it will have a significant impact on the profit and loss account next year. And our 2019 expectation is that we will deliver on a company level a healthy combined ratio. And your question was?
What is, so the 92 is, in the press release it says acceptable, in this case healthy. So what would be a range that is healthy? So better than a 96, I guess, for excluding change of conditions?
Good try. There is a reason why I say healthy and not give you a figure. So we have a history of being precise on guiding. We have been precise for 10 years, but this is a situation with some kind of uncertainty, obviously. We don't know how price increases will penetrate, how much volume we will lose, and how gray silverfish will develop during the next few months. We know how it will develop during the next quarters or years. That's not an issue, but we can't know in a very short term in that area. So acceptable or healthy, there are two phrases which you have used. They are pretty similar, but you find out. Yes?
On the claims inflation side, could you just give us some insight into how claims inflation has affected you during this year, both on frequency as well as the underlying inflation? Just to understand how your pricing is. Is it the pricing above your claims inflation, or is the pricing below, or is it?
Okay. So how is the price initiatives we are taking relative to claims inflation? I guess that most companies in Norway, including the big consumer-oriented companies, have taken slightly by surprise because claims inflation, especially in the motor area, is higher than formal indexes should say, because formal indexes are looking at the wrong parameters in that area. So what I will say is that absolutely all price increases we do, they are above expected claims inflation going forward. There is a margin to claims inflation. If not, a combined ratio wouldn't improve in that area. That differs a lot between countries and product areas. Vibeke, we have questions from the webcast, I guess.
Yes, so one question is if you expect a bad underwriting quarter for Q4 related to the grey silverfish, why don't you reserve more?
Why don't we reserve quarter four? It's not normal practice in the insurance world that you are taking potential future reserve losses for policies not sold or not put into effect. So that's a very different kind of story. So, in our opinion, reserves are prudent, but we do expect a combined ratio above 100 in quarter four on a company level. Next question.
And there's a question if there is room to do more share buybacks.
Share buyback was not an issue in the board meeting last evening, no. More questions?
With the equity market falling 10 to 15% in October so far, are you getting more opportunities to put money in equities?
Do we have more opportunities on the equity side since market is down 10% now? The question will be answered by Dag Marius in the Capital Market Day in 1.5 hours or so. Okay, thanks a lot. Is there more questions from the audience here? Thanks a lot. We love seeing so many people here, and we hope most of you will stay in order to have a deeper look into who we are and how do we view the future. We will talk to you about the company development as such. We will talk to you about investments, about big changes in the reinsurance structure, and about UK. So I hope I see many of you in 11 minutes. Thanks a lot for your patience. Thank you.